Welcome to NREI's Common Area Podcast. This podcast is brought to you by the award-winning editorial staff at NREIonline.com. Let's jump right into this week's podcast.
Hello and welcome to the Common Area with your host, David Bodamer. Let's dive into this week's top stories. Hello, David. How are you?
I'm doing well this week. How are you?
Fantastic. I know we're covering 3 stories in the podcast, but you guys did a lot more during the week, so we'll talk about those a little bit later. Where are we starting today?
So we got 3 pieces. One, just an update on the ever unraveling Sears saga, which seems like it's been going on forever.
The Sears of our lives kind of thing. Got it.
Yeah, so we'll start there. Then we had a piece based on some new data on what institutional investors are doing with the space inside of commercial real estate. And then lastly, some interesting data out of the Boston area on leasing in the life sciences sector and a potential signal for what that might mean for a recession, actually. So kind of an interesting report that we got out that came out of one of the brokerage companies out of that area.
All right. So now we're starting with Sears. So
yes,
getting right into the soap opera stuff. All right.
Yeah, let's start with the the saga, like I said.
All right. So what is the latest news?
The latest is that the executives, Sears, went through the bankruptcy. They got some emergency financing. They're now owned by a parent company called Transform Holdco, which now they're kind of through the bankruptcy restructuring, but it doesn't really seem like we have still much clarity on what if there's a turnaround possibility here. So what they're signaling is that that although they're not ruling out doing any more store closures, which we've already had. I mean, it just seems like every year or every 6 months there are Sears and Kmart, more Sears and Kmart store closings. So there might be more of those. They haven't ruled that out. So that's one piece of it. And secondly, just more broadly from that, they've had the financing packages. They have borrowed about $150 million to help keep them going. But, just overall, there's not much signs of life in their actual business. They don't really have a place in the current retail landscape. And it doesn't seem like that's happening anytime soon. We had a couple of talking to the consultants on this is always interesting because they don't pull their punches. I wanted to actually read a couple of the quotes from the folks that we talked to. One was this guy Neil Saunders, who's the managing director at a research firm called Global Data Retail. He said, despite going through the bankruptcy process, the business is still not on a sustainable path. It appears to be in exactly the same position as it was before, albeit as a smaller entity with less debt. In many ways, this is not surprising. And then we also had a quote from Paula Rosenblum, who's the co-founder of Retail Systems Research, which is another market intelligence company. And she said, "This remains the biggest scam I've ever experienced in over 30 years in the retail industry."
Oh, wow. Ouch.
Yeah, no, she was not holding back. "I can't believe Mr. Lampert was allowed to get away with it, frankly. He's just continuing to pass the carcass of this dead body around after extracting most of the value for his other companies."
Oh, man.
So
I like Paula. She shoots straight from the hip.
Yeah.
Wow.
Yeah, I mean, it's always nice when, you get people's unvarnished opinions and on something like this.
Yeah. I'm just surprised that Sears is still around. I mean, how long have they been going through this? I had a young man that worked there for probably 5 years, and it was just going down quickly while he was working there. We heard about it all the time, and that was 10 years ago.
Yeah.
And then they just fired a lot of people. They closed stores around here, and I don't even know if there is a Sears around me anymore, to be honest.
I know. Yeah. We cover obviously all parts of commercial real estate, but I started specifically covering just retail real estate about 20 years ago. And like at that point, I feel like was the start of this, Sears is in trouble. And I mean, and at that point, I remember we weren't that far removed from Sears still being the largest retailer in the country. I think Walmart only surpassed them to become the largest U.S. retailer, like sometime in the 1990s. Up until that, for the previous, 50 years, Sears was the number one retailer. And then, losing... I mean, what's happened to them, I think, is just indicative of what's happened to the department store space in general. It's just, it's not a news story. It's just, they lost market share and they lost business lines to all the big box stores that emerged in the 90s. Department stores in the U.S. largely just became fashion retailers more than anything else. But then, if that's the business, then, finding your niche in that. We know who's successful and who's not at this point. Like Walmart rules, Target rules at lower price points. Some of the luxury department stores are doing okay. The idea of like middle market department store chains, just those are the ones that have. It's just that they've always suffered. The more amazing thing at this point is the fact that they're still around. And of course, they bought Kmart, the other chain that was struggling. Putting two struggling chains together didn't somehow magically work. So, and then I think as Paula said, it's at the end of the day, it seems like there's been a long play for Eddie Lampert. I can't even remember when he entered the picture on Sears. It's been years and years and years. But it's just been this steady run of new strategies, new this, new that. But at the end of, without actually turning anything around. But his holding companies and everything else have done fine. They've extracted value out of the real estate. They've done various other things. It's just, as a retail business, there's never been any traction.
Yeah, I really want to know who the person is that secured that $150 million, the loans that you were talking about, because that person was amazing to get $150 million from whoever. And then I'm thinking, who are the people that gave over that $150 million? What were they thinking?
Well, I mean, Lampert was one of the lenders lending money back to the business. I mean, I think, there's still... There's been a long process of them monetizing their real estate. I don't know what they still have left. But there may be enough in, like even just breaking up a company, there may be enough monetizable assets to justify even that kind of financing, even if their retail operations are no-go.
Yeah. All right. Well, I guess we'll see. We'll see what happens.
We'll see. It just seems like that's what we've been. I don't think anybody's had any illusions that Sears is going to have a turnaround strategy, but it is just sort of this amazing story in a way that it's lasted this long, that they've managed, that they've forestalled the actual end of the line for this long, despite the fact that I mean, you don't know where the closest Sears to you is. I'm not sure where I'm sure there's a Sears somewhere in northern New Jersey near me. I don't know the last time I set foot in it.
Yeah, and honestly, not to sound crass or just rude, I don't miss it. I didn't shop there a whole lot. The one I miss is Radio Shack because they had stuff that I can't find anywhere else. Anyway, that's a whole other story. But yeah, Sears has been doing this death rattle for quite some time. So
yeah.
All right. Well, is there anything else we need to cover with Sears besides maybe the coffin?
No, that's it. Unfortunately.
All right. What's our next story?
So switching gears, something more positive. A new report from Hodes Weill and Cornell University. They put out this annual report that's a really good monitor of what's happening with institutional investors. Like they actually get responses from more than 200 of these big institutions. We're talking like things like the California State Teachers Retirement System, the Norway's pension, these huge pension funds, international sovereign wealth funds. Folks that have institutions that have a tremendous amount of money that then, allocate. And then what they find out is, okay, so of all of your investable for when you're figuring out what you're going to invest for the coming year, how much of it is geared towards commercial real estate? What are your target returns for it, et cetera, et cetera? So it's, again, like I think I mentioned in last week when looking at just foreign money in general, when we're looking at institutions like this that are not someone that's completely devoted to commercial real estate, seeing they're it's good to see what their attitudes toward the sector are, since they are discretionary. So on that front, on that buildup, the news is good. The fact that basically the respondents to this survey, to the most recent survey, found that on balance, institutional investors continue to increase their allocations to real estate. Now it's up to about on average for the ones that they talk to, it's about 10.5% of their portfolio is now targeting real estate. That's up 10 basis points compared to a year ago. And then looking back over a number of years, there's just been a steady increase. I think averaging about 10 to 20 basis points per year if you look at some of their past years of their survey. So just increasing how much money they're targeting in commercial real estate, and then within that, finding some interesting stories and patterns. So, for example, they found that looking at next year, about 70% of the institutions they talk to expect to maintain the allocations they have at their current level, while another 24% plan to increase their allocations even further. So there's no sign of any pullback. And then in terms of looking at regions and investment strategies, North America remains the most popular market for investment, preferred by 92% of institutions that are investing in real estate. They're looking at North America. After that, there's Europe at about 73%, the UK 61%, Asia 40%, Australia 36%, and emerging markets 23%. And then in terms of investment strategies, they're kind of pretty favorable across the board. But I think so there's some that are focusing on core real estate, but then there's also pretty heavy interest still in value add real estate and opportunistic plays. So that's kind of like what some of these really big managers of money are thinking.
David, is there anything specific that you want to kind of highlight out of this report?
Yeah, they had some interesting examples of what a couple of what some of these bigger funds are doing. For example, the California State Teachers Retirement System, which I mentioned earlier, had reported one of the largest increases in allocations towards real estate, upping their target by 200 basis points to being 15% of their target allocations are now commercial real estate. Meanwhile, the Norway's government pension fund had one of the biggest drops, where they went from having 5% of their funds allocated to real estate down to 3%. So, those are just some interesting examples of funds making relatively large changes in their allocations. But like I said, even though Norway stepped back, on balance, the overall picture from these 200 institutions was slightly increasing their allocations in the sector. So that's kind of remains the major takeaway from this.
Got it. All right. What's our third story today?
So this was an interesting piece. Basically, a lot of this is based on some insights from Colliers International's office in the Boston area, where, according to their director of research in that region, Aaron Jodka, he noted that the recent statistics are showing that there's some negative absorption in the Boston area markets for the life sciences space. And the region, that's one of the top life sciences markets in the region. I mean, in the country, there's a ton of lab space there. It's partly because, with MIT, Harvard, all these, heavy duty universities in the area producing a lot of brain power. There's just a huge market for developing companies that are doing a lot of life sciences research, near those campuses. So it's kind of an important market to look at when it comes to life sciences in general. So the fact that there's been negative absorption is a potential red flag, because he's noted that other times when the market has had that kind of negative absorption, it's been followed by a recession.
That doesn't sound good.
No. So, I think it's one of these things though where it's like, similar. It's historically that's what happened. This is what's happened. So it's a potential thing to be aware of. However, there are some caveats. In our interview with him, he said, while there's negative absorption, it doesn't feel like the sky is falling, as conditions here are quite strong. And so it's also like what we're talking about here, the actual negative absorption was 150,000 square feet for the third quarter. So it's just barely negative. Compare that to 2009 when there was the apocalypse happening. There was a negative absorption of 1 million square feet. So we're talking about what's potentially a blip and not necessarily the way that, I'm interpreting what he's told us and what we're saying is that hey, this is something to be aware of. The vacancy rate ticked up in this market. There's a little bit of negative absorption. Historically, this has been a bad sign. However, this is not, we're not on the scale yet of what we saw in the past. So it could be one of these correlation causation kind of things. Mm-hmm. So in the past, this has meant one thing, but it's not necessarily something that we should be oh my God, there's this negative absorption that happened and it necessarily means Y is going to happen. Yeah.
It's like you said, something to be aware of. It's on the radar slightly, but it's like cloud cover instead of a tornado coming through. Just something to watch. So that'll be interesting to see how this plays out. Unfortunately, you and I have talked about different signs before, and so we don't like to add up all the signs.
Yeah, and I think that was part of his observation too. I mean, we had the instance of the inverted yield curve that happened, a couple of months ago, which has historically has happened before we've had recessions. There are issues like overall economic growth, which has been moderating, slowing job growth, the trade war in China, the manufacturing index. So there are a lot of reasons to be cautious, I think, in the market. But whether, when, if, how deep the recession, I think that's for smarter people than me to figure out.
Or me. So I'm right there with you. All right. Anything else on this story that we want to cover?
No, that's basically it. And this piece, along with all the previous pieces, folks can go to the website, NREIonline.com, read the full articles, see more quotes, more insights. With a couple of these pieces, we also have interactive charts. We have an interactive chart on this Boston piece that shows the historical absorption trends going back over years that Collier's provided to us. So there's just some interactive things that people can check out as well to dive further into all three of these pieces.
Mm-hmm, mm-hmm. And I know we got a couple other headlines that you wanted to go over, and those are things that we've actually touched on a little bit before. You want to share what those two headlines are?
Yeah, so we have an update on just what's happening with affordable and workforce housing, which is an issue I think we've pointed to in the past. Just the need for that kind of housing in the market, and just an update on while there's been some ticks up, it's still not. There's still far more demand than there is supply for that kind of housing supply. And then secondly, just an update on what's going on with student housing investment, and just investors still continue to pursue those assets, but prices are, prices have been going up, and there's some concern about whether we're approaching the peak in the cycle for that property sector now too.
Got it. All right. Well, they can all find them online. David, great job today. Thank you so much for covering these headlines.
Absolutely. Thank you for your time, and have a good weekend.
Always a pleasure. And thank you all for listening to the Common Area Podcast with David Bodamer. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when David comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your colleagues and have a nice talk about Sears, and if you've ever seen one or seen one in the last 10 years. Who knows? It's like a phantom ghost thing, right? What do you call that? Apparition? I don't know. I don't know if that's the right word or not, but I'm sure I'll see one.
We're getting towards Halloween, so
yes, the ghost of Sears past. Anyway, exactly. They're rattling their craftsman tools. Anyway,
or are they a zombie just hanging on right now?
That's way more appropriate. That's it in his brain. Okay. Anyway, for everyone at NREI, this is Eric Johnson inviting you back next week for all the news that matters to you. We'll talk to you soon.
Thank you for listening to the Common Area Podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guests and does not necessarily represent the views or opinions of NREI or Informa. The content has been made available for information and educational purposes only.